Warning for UK pensioners. Avoid these banks under new 2025 rules. If you're a UK pensioner or have a loved one who is stop scrolling, new banking rules coming in 2025 could quietly drain your savings, introduce hidden fees, and limit your access to your own money. Some of the most trusted banks in the country are making changes right now that you're not being properly warned about, and if you don't act soon, you could pay the price. In this video, we're exposing what's really happening, which banks to be cautious of, and what you can do today to protect your retirement funds before it's too late. Welcome to UK Pension Update, your trusted source for the latest news, changes, and expert insights on pensions, benefits, and retirement in the UK. If you're retired or planning for it, we've got you covered. Let's dive into today's important update. So, what's actually happening? Starting from April 2025, new financial conduct regulations introduced by the Financial Conduct Authority are cracking down on how banks manage pensioner accounts. While this is generally good news for transparency and fairness, some banks are already responding in ways that could harm pensioners instead of helping them. Certain high street banks are changing account terms, cutting interest rates on savings accounts specifically aimed at retirees, and in some cases, closing down legacy accounts altogether. One of the most concerning developments is the quiet removal of no-fee accounts for pensioners over the age of 75. These were accounts that traditionally offered basic banking services with no monthly fees, and for many retirees on fixed incomes, they were a lifeline. But now, under the new rules, some banks are saying that maintaining those accounts is no longer sustainable. Translation? They're introducing new charges, in some cases as much as £7 to £10 a month. That may not sound like a lot, but over a year, that's up to £120 money that could be better spent on heating, groceries, or prescriptions. Another sneaky tactic we've seen is banks automatically switching pensioners into new premium accounts without clearly explaining the costs involved. Some of these accounts come with added services like travel insurance or breakdown cover, which sounds good on paper, but are completely useless to many pensioners, especially those who don't travel or don't drive anymore. The worst part? Some banks are doing this with just a letter in the post that many customers might misunderstand or miss entirely. It gets even more worrying when we talk about accessibility. Under the 2025 changes, banks are being encouraged to go digital, and while that works for some, it's causing chaos for older customers who rely on in-person services. Several banks have already announced branch closures, especially in rural or suburban areas, pushing pensioners toward online banking. But here's the problem: not everyone has the digital skills or access to manage their finances online. For these people, losing a local branch could mean losing control of their finances altogether. So which bank should you be cautious about? While we can't name and shame every single one here, reports from consumer watchdogs have already flagged a few of the usual suspects. Some of the biggest high street names, including banks that have been trusted for generations, are now under investigation for aggressive account restructuring, poor customer communication, and even denying cash withdrawals over the counter unless pre-booked. Yes, you heard that right. In some branches, pensioners are being told to book an appointment just to take their own money out. But don't worry, it's not all doom and gloom. There are still banks out there that are maintaining fair terms for pensioners, offering dedicated customer service, and keeping their branches open. Building societies in particular seem to be stepping up, with some even launching new pensioner-friendly accounts that respect the needs of older customers. The key is staying informed, reading the fine print, and, if necessary, switching banks before any new fees kick in. So here's the bottom line: if you're a pensioner in the UK, don't wait until these new rules take effect in 2025 to take action. Review your accounts now. Talk to your bank. Ask questions. If they're vague, dismissive, or trying to upsell you, consider moving your money elsewhere. Because your retirement fund should be working for you, not padding a bank's bottom line. Thanks for watching UK Pension Update. If you found this helpful, give it a like, subscribe, and turn on the notification bell so you never miss a critical update that could affect your finances. Stay informed, stay prepared, and we'll see you in the next video.